weekend all. Ira Epstein with your metal update, and this update is for Saturday, the 16th of July, 2022. I am still out of town, returning about midweek. But as you can see, I have kept you up just as I promised I would on literally everything. And at the same time, trying to keep up on the markets as well. And here's what you've got. You're trying bits of rallies. You've got on the 26th, the two-day FOMC meeting beginning. We're already hearing from the different Fed governors as to what their thoughts are, but now you're not going to hear any more. We go into the quiet period now. So, you're about a week ahead of everything, and now things get quieter, and we have to ascertain as we see the economic data come out what's going to move what, when's it going to move it, and so on. Simply put, I don't see a big change. I think the Fed is committed to higher interest rates for the near term, certainly through this year of 2022, and then we take a look. The big argument for people is, has inflation peaked or not? And that's the big argument. I understand it, because if you take a look at the energy markets, and that's one of the big elements here, you're not at 122, you're at 101 in this September Brent. WTI crude's not sitting there just a few dollars under the 122, it's at 94. Gasoline, well, that's fallen back. Heating oil's fallen back. Natural gas, no. Natural gas, I've warned traders. I said, you don't want to be fighting that. You're now in the middle of July and August. It's coming up. That's when you're hot, and you can easily get situations just set these markets up and on fire. So be very careful. I don't think you want to fight with that. Let's come back here. I went the wrong way. There's the gold market that I wanted. Let's take a look at the monthly chart of gold. First off, momentum pointing down. You see that. The market peaked out back here on the monthly chart, and we're talking back in March 31st, and now the market coming down through July 15th. Well, you peaked out here. When you take a look at it, you got up as 1949, and now you're looking at a market that is down to 1703. So the market's backed off about $240, $250 an ounce. Okay. Can the market get to the lower Bollinger Band of 1670, 280? I don't see why not, especially knowing that interest rates are going higher and the dollar staying strong at this point. When we take a look at a weekly close-only chart, it's hard to argue what this market has done. You've gone from 1985 to 1703. And when we take a look at a weekly bar chart, look at how the market's leaked away. Now, in all fairness, you want to pay attention right here. This break low in the market was 1673. This one 1676. Then you started climbing a bit to 1692. So you're entering that top tier. So you're getting into the support zones of the market. That's the point that I'm making. You always pay attention. Where did the last break lows take place? Because markets have a tendency to test those and then see if there's anything under it. And if not, they can turn around on you a bit. The trend of the market on the swing lines is certainly to the downside. We have a pattern of lower highs, lower lows. When we look at moving averages, I'm looking very shortly for the 18-week average to get down and under the 100. Now, what about support? Well, the 200's down here at 1651, and we've made mention of that weeks after weeks, that it might go there, especially given where the slow stochastics are. You're running the slow stochastics, but you're under them. Markets only stay under them 5% of the time. So at any point here, you need very little reason for the market to go to the right-hand side by giving you a rally in part. You were down this week another 2%. So somewhere between here and 1652, that's where I'm looking for the support to come in. Momentum is down, but not embedded. It takes 3 weeks, and I want you to look right through here. 3 weeks of closes where you get readings under 20. Here's week 1 and 2. You don't have the third. Most times you don't embed. You'll get up just the way you do here. You get overbought, you get oversold, you get overbought. So I can make an argument that some people will say, this is going to be the area that the gold market tries to put its hold on. I understand it from what I've just told you. In the gold-silver ratio, silver just isn't able to gain on the gold market at all just now. It's still very much in a bear trend. Is it embedded? Well, let's look at the same thing, and I think you'll see. Week 1 of embedding, week 2, week 3. You're fully embedded. So the difference here is that silver on hard rallies is still going to be sold until the red line, the slow stochastic that is 657, closes over 21. If you've taken my enhanced Bollinger Band course, you learn how to work with that. I'm not going to teach that here. Take the course. It's on our website under education at www.iraepstein.com. You're not going to get me to tell you that I think that you should be pressing the short side of silver. If you look here at the silver market, finished at 401.35 under the Bollinger Band week 1, 2, 3. This week you closed under the Bollinger Band, or did you? Yep, for sure. And this week. So you got 5. You rarely go 6. So I think the market in copper can easily, for whatever reason, don't know what it'll be, I think it's going to try to move to the right-hand side of where the black Bollinger Band comes in. That is not a bull sign, but it is a sign not to go short. There's a huge difference between the two. In the platinum market, we have fallen back in an embedded reading. Watch. Not there. Week 1, 2, 3. Fully embedded. Still going. But each week it's making a lower low, not letting you get short. On the other hand, do you see the 18-week average getting ready to close underneath right here? The 100. I believe that's the 100. Let's see. That's going to be... I take that back. It's 200-day average. So you're going to have the 18 under the 200-day average. Well, it's still another bearish crossover. Hard rallies in this market get sold up there, but what's going to make it rally there? That's the problem I'm having. I don't see the elements here for a big hard rally. The dollar is super strong at this point, but you don't buy upper Bollinger Bands. You have an embedded reading. You're waiting on pullbacks to buy. So in summation, dollar strong. I have reasons that I wouldn't be pressing the short side of the gold and that down here, but given rallies I would in that, and silver still looks pretty weak. I'm Ira Epstein. Have a great weekend.